Today is a bank which is primarily a corporate focused bank. So the focus for me immediately is to drive the retail and the SME business, and then also really strengthen our digital presence. So we don't want to be a small bank for long. We want to be one of the top 5 banks in the country in the next 5 years.
In Sri Lanka's banking landscape, Union Bank is one of the youngest. In 2023, CG Capital Partners Global acquired a controlling stake in the bank. Since that acquisition, the bank has been re-strategizing its approach to the market. And in the studio with us today is experienced banker Dilshan Rodrigo. Dilshan is the new chief executive at Union Bank. So Dilshan Rodrigo, welcome to Echelon. And it's certainly an interesting time to be taking over the helm of an important commercial bank, Dilshan, because the economy's been through a tumultuous time. I think things have stabilized to some extent now. You're a banker. You have large amounts of shareholder capital at stake. You have deposits also to which you need to be, responsible for and provide return. How does one kind of approach the current climate and the balance sheet responsibilities that you have? From your vantage point, how do you strategize here?
So Union Bank is a small bank. In the last 10 years, if you take the last decade, I call it the story of two halves, because TPG had acquired the bank.
That's a private equity firm based out of the US.
It's a private equity firm based in the US, and they had a 5-year time frame, and they were extremely aggressive in that first 5 years. We were one of the fastest growing banks in the country. And then all the unexpected events unfolded, and that delayed their disposal of the company. And during that period, they played a very conservative role in terms of managing the operation. And that took a toll on the business. And today, what I inherit is a bank which is primarily a corporate banking focused bank. And obviously, when you do a large amount of your business in corporate banking, despite having 60 branches around the country, your margins tend to be very small. So the focus for me immediately is to drive the retail and the SME business. That's why we have 60 branches. And then also really strengthen our digital presence. So digital is really the future. Today, the way we eat, drink, commute, travel, everything is basically dictated by our digital lifestyles. And the spending has to be aligned to the way in which banks operate. So that's a huge area for me in terms of the future. So as a bank, position myself mainly as a personalized bank, which we already are, very strong on risk management, on the infrastructure, the people, but really drive the digital franchise, both on the front as well as on the back ends, and also have very focused, customized products that cater to different priorities. So we don't want to be a small bank for long. We want to be, I think the chairman made a statement in an international business magazine a few months back, where he said he wants Union Bank to be one of the top 5 banks in the country in the next 5 years. So through organic as well as inorganic means, we have very high ambitions for growth.
Tell us very quickly what the capital position of the bank is versus what's required in regulatory terms, Dilshan?
So we are very highly capitalized. We are one of the most capitalized banks in the country. So that's not a concern. The challenge is to really deploy that capital for growth. And immediate focus would be to drive the retail and the SME franchise across the country. And that is what I'm doing right now. It's very encouraging when you speak to the branches, when you visit the regions, the excitement that they have. Very soon we'll be launching our pawning as well as leasing business as well, which has huge potential for the future. Being strong on capital means you have money to invest in things that matter. So for me, the key priority would be the digital investment that is required to make our processes more efficient. On the back end side, get your loans approved. Today, it takes probably a week or a couple of weeks or even a month to get your loan disbursed. How do we make it days if not hours, or if not minutes, to get your loan approved.
So the kind of transformation that you're talking about, from going from a corporate dominated book to one that includes, I mean, you're not going to give up corporate book, I suppose, but you're just going to grow the SME and retail side of the book. This is a fundamental kind of transformation that you have to do. You know, the bank cannot approach business as usual, as it has done in the last 5 years, right? When as CEO you look at this challenge, you know, how do you work this out? How do you make this happen?
So it's about galvanizing the people, and we have good talent in the bank. We are also looking at acquiring some talent. As you know, we lose some of our talent overseas, and that's been a big issue. But making it exciting for people, realizing the potential that exists. And I've seen very often people who have gone overseas coming back as well, because they went overseas 2 years back when the country was in a different situation, and today they see a lot more potential in the rebuilding phase taking place. So that's something. Energizing the people is, right, I think, the most important thing, and then showing them the vision. The vision in terms of where the bank is headed in the next 3 to 5 years is an important point for them to be able to really enthuse themselves, and then work together to deliver on that. So we have very big ambitious plans on investing in digital, investing in the whole infrastructure that is required, bringing in the CRMs, which we call the cash recycler machines around the country, rebranding the bank, which you would have witnessed in the last few months. The presence is becoming much more pronounced now in all the regions and across the country. And in the future, also attracting new talent in key areas, particularly on the technology side, and continuing to strengthen, the personalized service that you can offer in the branches. So there's a lot of work that needs to be done in terms of tweaking the model. So strengthening that branch model is a key focus area for us right now.
When you talk about retail lending and lending to SMEs, I mean, that's a very large area, Dilshan. I'm sure you're not just going to go broad brush wholesale into every aspect of it. You will be more nuanced in how you approach it. Can you share with us what are those initial thoughts and strategies about how you will approach this area of growth?
So that's a very good point. I mean, we are still at this moment in time not going to go all over, right? So when it comes to retail, very, very clear that we want to be with the mass affluent segment. Right. So those are the people who are earning a certain threshold in terms of salary levels, working in companies. So a lot of focus on the salaried segment beyond a certain threshold. A lot of focus on the SMEs that are priority sectors for the country.
Sure.
Right. So you're talking about the production economy. So people who are manufacturing, assembling, import substitution, those industries. Then the exporters, a very high priority industry for us. The health sector, again, health sector manufacturing, we are beginning to see people interested in that area. And again, on the tourism industry, again, there's a lot of potential there. Less so on the construction, more so on the working capital business there, as well as the technology sector. So those would be my key focus areas. Those are the industries that we are, driving our market share very aggressively. So working on pipelines, working on engaging with them. And also CG Group has a lot of interest in supporting our local entrepreneurs expanding overseas, particularly to Nepal and India.
So you have to help us define what CG Group is. You're referring here to your main shareholder. Give us some context here, Dilshan.
So the Chaudhary Group is owned by Dr. Binod Chaudhary, who's a Nepali-based billionaire, dollar billionaire. He has operations across 22 countries, and he owns more than 200 companies all over the world. So he's mainly into three main business lines. Manufacturing, which is, he's known as the Noodle King, the person who brought noodles, instant noodles to South Asia. Along with that, they are into the leisure sector. They own the Taj hotels. They have a minority shareholding in the Taj Group globally and
Yes.
also has a presence in the Taj Hotel franchise in Sri Lanka. They also have many other interests in some of the companies that operate in Sri Lanka, like the Jetwing and the Golf Ace Hotel. So they are no stranger to Sri Lanka, but this is their very first investment in a bank, and they're very keen to share their best practices because they own a bank called Nabil Bank in Nepal, which is one of the most progressive, one of the most profitable banks in that country. So as a leading player, they want to emulate that as fast as possible in Sri Lanka. They actually travel down for meetings, board meetings every month. His son, Nirvana Chowdhury, is a chairman on the board. And so we engage very closely. We try to see how we can bring in those best practices, learnings, particularly on the digital side, that we can translate down here to the Sri Lankan operation. We are also very keen to get involved in sustainability initiatives. They have an entrepreneur development operation, which is something that we want to emulate here. And that's one of the things that we plan to launch very soon in collaboration with a university here, which is a school for sustainable entrepreneurship. So all these initiatives are very much on the cards right now. So we work very closely with them and also hope to take some of our local businesses to start expanding overseas. And that also will benefit the country as much as it will benefit the bank in terms of, being the conduit for that.
Following up on what you shared with us about the vision that the Chowdhury Group has for their group and also by extension to Union Bank, right? I suppose there's a little sense of impatience. You need aggressive growth. You referred to your processors being very strong. That's the legacy that you have, but you need to become more digitally oriented, right? Can you define for us what sort of value that will bring to the bank? Because you have to look at this in terms of every aspect of your income statement or balance sheet. How does this add value to the investors, to wealth creation, right? What's the sort of value proposition in just getting into digital? What does it mean?
I think many banks or many financial institutions today are still very much, they talk digital, but really they're still running the business traditionally.
Sure.
So there is a lot of paper in the process. There are a lot of queues in the system. There are checks, there is cash. So when you say digital, you're talking about basically being able to do your transactions electronically, right? So
Sure.
you need to start by measuring where you are right now. So many banks are probably at the 60 to 70% of their transactions at the digital stage.
Right.
But a truly digital bank would be at about 90% and above. And what that translates is to the people, to the customers, right? It means faster processing. So for instance, if you want a personal loan, you come and meet me. And if the traditional process takes, let's say, from the time you ask for a personal loan to getting that delivered, which meaning that you get the money dispersed to you, takes, let's say, 3 weeks, right? And that's not unrealistic. If a bank can offer that in, let's say, a couple of minutes or in an hour, then that would be a huge transformation, right? So when you have a process that takes 3 weeks, that can be done in hours,
Sure.
that also translates to huge efficiencies for the bank concerned.
Sure.
Because you don't need that many people, you don't need that many processors, you don't need so much rework. So the amount of resources that you require to be able to do that also becomes that much less. So that's ultimately what that challenge is about. So if you become a truly digital bank, and there are many banks now, I think recently in the top 1,000 banks in the world, which is a list that is published every year by Fortune, we had about 5 banks that are pure digital, which means that there is no brick and mortar at all. They just run the business completely digital. So that's the future. So many banks who are traditional are now building a hybrid culture, so driving their neobank along with their existing bank. So ultimately, you can run with a fewer number of people and be able to deliver a much bigger proposition. So the role of the branch becomes very crucial there. So the branch team are more sort of financial advisory kind of roles, because all the transactions are done digitally.
So this concept of a neobank, it's a digital only bank, right? And like you say, in some cases there are hybrids of these. Big large banks have both a neobank and a traditional bank. When you kind of approach this, the neobank is like almost the customer facing end of it, right? The rest of the transformation you're talking about is the back office of the organization. What's your remit with Union Bank as far as the customer facing digital aspect of the bank is going to be?
So I'm fortunate that when I came into Union, I realized that they do operate a hub and spoke model,
Right.
which is where the branches are expected to do the marketing, and the back office and the processing work is done at the center, right? So the important thing is to refine that.
Right.
How do you really refine that and make it really efficient to achieve the kind of SLAs, turnaround times that we are aspiring to? And how do you really increase that digital index from maybe 60-70% down to 90 to 100%? So once you do that, then you see the benefits starting to trickle in. So you have to invest. You have to invest in technology. You need to invest in people who understand the technology, and you need to invest in the processors and the systems that make it happen. So there is need for consultants, to people to come in to help facilitate this exercise. So that's the journey. I think if banks don't do that, they won't survive in the future, because another aspect that is going to take place is that if you take the Sri Lankan environment right now, consolidation, right? So we have, and have you heard me say this before?
Yes,
right?
indeed.
We have 24 banks, over 50 financial institutions. So there is an opportunity here to reduce that significantly for a small population like ourselves. So that's another big journey. And in that consolidation process, those banks who are fitter, nimbler, more efficient are going to gain over the big, companies that have not embraced that new ways of doing things. So they are going to be at a huge advantage. So that's really the opportunity that all of us are at. And I know that the regulator has a huge role to play in this as well. First, to push people onto that consolidation exercise, which they've already started to do. Second, also to support this neo-banking concept, right? In many ways, so how you store data, whether you maintain it in a cloud, how do you support the AI, how do you support robotic process automation, all these things, the regulator also has a role to play. You see in India, for instance, they have the digital ID, the Aadhaar product, which has revolutionized the digital in India, along with the demonetization that took place. So there have been some very bold moves that we need to do the same. And I must say they are very positive, but a lot more needs to get done in terms of supporting that journey for the banks.
As CEO, you'd be watching several key metrics for the bank very closely. I'm sure some of these metrics are more important than others for various reasons. From where you are right now at Union Bank, what are you watching the closest, Dilshan? Where do you think your biggest gains are going to be? Are you looking at income, net income? Are you looking at your cost structure? Are you looking at your capital base, how you comply with regulations? Which ones are the ones that you think offer the bigger gains?
So when you look at metrics, you need to look at the means and the ends, right?
Sure.
So certain metrics drive the ends.
Right.
So I would look at certain things that are a little bit more unconventional, like how happy are your staff? Is Union Bank a great place to work?
Sure.
That would be a very important thing, because if staff are happy, that
Sure.
translates into good customer service. Then obviously your customer service improves, right? Then how proficient are our staff on digital? To
Right.
what extent have they embraced it?
Okay.
The more they have embraced it, the more they have the confidence to be
Sure.
able to market it to customers, their relatives, their friends, and everyone else. Then obviously cost income ratio is probably a very conventional metric, but that needs to translate, because improved cost income ratio results in improved profitability and shareholder returns. So initially, I think those earlier metrics are what I would focus on. And then as we build traction, then automatically a lot of those things will translate into the metrics that shareholders or investors will relate to.
And how receptive are your main shareholders to your approach, to your strategy for the bank currently?
They are very much aligned,
Right.
Very aggressive.
Right.
They have huge ambitions for the bank, which is probably why I joined the bank. So very keen to make it work, and I think it will be a wonderful case study when we do make it work, as to achieve the aspiration that was set by the chairman, to make it one of the top 5 banks in the next 5 years. So
what does that translate? I mean, I'm sure you've sort of deconstructed that. Okay, you need to be top 5, means a systemically important bank. What does that translate to in terms of growth, in terms of acquisitions, in terms of M&A? I'm sure you have some kind of strategy on this or some thoughts on this. What does it translate to?
So organically, it means that you need to grow much, much faster than the industry, right? Much, much faster. So if you take the first half of this year, we grew by 17%, the loan book, when the industry grew by 1%.
Right.
So that kind of growth momentum for a small bank is possible because you have a low base to work on. But ultimately, it's about getting the people, bringing the creativity, bringing innovations that will really make customers want to do business with you. And the growth has to happen more on the retail as well as on the SME segments. But that's where you make a bigger difference amongst the population. I mean, over 50% of businesses in Sri Lanka are contributed by the SMEs. So that's where really the opportunity lies. And parallelly, while you're doing all this, you need to continue to focus on your infrastructure, your channels, right? You have all the digital channels so that people can interact with you in different ways. So the QR code infrastructure, acquiring infrastructure, the credit card infrastructure, all these bring customers to your bank. So those need to be built up, and also a full range of products, right? So at the moment, the products are limited. So we are bringing in pawning and leasing, which I think are very important in a country that is in this growth phase. So all these, the product range, the talent expertise that exists, and the technology to back it are key aspects to achieve that growth journey that we are aspiring to.
And to sort of achieve a leap, you'll have to look at some form of inorganic growth for the bank. So
Absolutely. But I would think that would happen probably beyond the second year, right? So in the first 2 years, we need to really establish ourselves, the brand as a preferred choice, improve our brand rankings, improve our perception rankings, customer service rankings, and then as we go along, then look at opportunities that exist on the inorganic side, and that's inevitable. That has to be done because just by organic growth, what we are aspiring to do cannot be achieved on its own.
When you look at the outlook for the economy, and I suppose that dictates what the outlook for banking is also going to be like, how do you read the tea leaves right now in front of you?
As you said, we've been through a very difficult time. 2019 to 2022 has been unprecedented, tumultuous. It's been a challenging time, and it's been a rebuilding phase for all the institutions, and banks played a pivotal role in supporting that economy during that difficult time. I remember at one point we had 20% of our loan book under moratoriums, and today.
Right.
We are at a situation where, almost all of these companies have actually resurrected themselves and are on a rebuilding phase. So that's a really big positive because businesses have now taken it in their stride and have been able to, turn around. And also they've learned from all these difficult times that they've had, and they have become more resilient. So I think we can learn a lot from the SMEs, how they've been able to evolve and grow during these difficult times. So I think the business sentiment is positive. So that's the main thing. Long way to go. I mean, I think you've heard this being mentioned by the president, the governor, the tightrope that we are walking on. The fiscal situation, finally we are having a primary surplus. Then the current account is also a surplus on the balance of payment side. We've just finalized the ISB. And what has been provided as the amount that we have to allocate for the settlements of interest and the capital is now tolerable. We know that. So all these are positive signs. And of course, there's a lot of challenges ahead. We need to really get our focus right. Elections around the corner. But generally, overall, I would say all positive in terms of where we are right now.
Dilshan, this has been a fantastic conversation. We've covered a lot of ground. Anything you think you need to add to round this off?
From the banking sector, right? I think it's very important, the regulatory environment, the culture. We have a reputation for lack of transparency. How do we really support the sustainability, discussions on corruption? All these needs to be passed, right? We need to move on from there and then move forward with a different thrust for the country. Bankers have a huge role to play in that journey, but we need to take away a lot of those issues and we need to address those head on. Those are the tough challenges that have to be addressed if the country were to move on and become attractive for foreign investors to come in. So it's critical. Right now we are seeing a very positive sentiment, but it's not translating to people making investments. Investments into production, investment into warehousing, investments into value-added projects, assembly operations. So this is the missing piece. In order to do that, we know where we went wrong. We need to address those. So whoever is the future government needs to be able to focus on those and then make Sri Lanka an attractive destination. And that's what really makes everything possible.
One final question, and that is the regulatory landscape is also changing with the new banking law that is around the corner, I think, right? From your perspective, from Union Bank's perspective, how is this going to serve? You must be looking at, what this means and how you're going to work with the new regulations and the law. What are your thoughts on this?
Very positive, really. I think the strengthening the central bank's hand, the independence of the central bank is a very, very positive development. Strengthening the digital, supporting digital in the banks and building in those new infrastructure to support that is another extremely positive development. The area that we need to improve on is the enforcement. The ability to be able to enforce what is being set out in terms of rules and regulations, acts and legal parts is very important, because there's a lot of, unfortunately, in the country right now, there are a lot of people who find a way to circumvent that. And then that creates lots of issues. So good example, I take an example from Maldives. As you know, Maldives is in a lot of difficulty right now in terms of their foreign exchange situation. It's because a lot of the earnings that are coming through are being parked outside. Money doesn't come back to the country. Not very unfamiliar for Sri Lanka.
Sri Lanka,
so how do you build that enforcement mechanism? I think you can learn a lot from India. India have been through a lot worse than we have over the last 20 to 30 years, and they have strengthened that enforcement mechanism. Maybe we need to look to our neighbor and get some of those ideas and really work on that. And that will help in terms of managing the leakages, some of the issues related to corruption, addressing some of those key points, and then really doing business in Sri Lanka much more palatable for everyone.
Dilshan Rodrigo, great conversation. Thank you so much for joining us.
Thank you, Shamik.